Good afternoon, everyone. Welcome to Friday, October 10th, 2025 edition of Trading Trends ETF edition. Wow, do we have a program for you today. Interesting show today, interesting tape, obviously. We'll take a look at, I promise you, pretty much every chart that mattered on the day for the most part, from the ETF level, as well as recapping the week and the year. I'm a big believer on one day does not a trend make. We've been calling for a little bit of a digestion with some zigs and zags in the market. We'll take a look at SPY and China, where they're really victimized ETFs today, down 3 standard deviations. So massive move today. Let's take a look. But like I said, still wearing my Eagles gear. Yes, we lost to the joke Giants yesterday, but the Giants have, this is a microcosm of what I'm trying to say about markets. The Giants have gotten their second win in 2 years. The Eagles have gotten their second loss in basically 2 years. So sometimes even a little ripple in the water can cause a huge wave to maybe have a little bit of an effect on it, but the effects are short term. I think let's see if opportunities abound here for markets. But let me take a look. We have a lot of great stuff to look at today. New highs right at the opening bell. It was really almost quite dramatic. And then the Trump comments about China. But we'll take a look at all the stuff. It's going to be a big program today. So today, a big 5% drop in China. We'll take a look at the FXI and Chinese internet. I'm telling you, we'll look at everything that matters. A big 5% drop in China today. Trump basically said we are considering intensely, I think the exact words were something like intensely raising the tariffs on China since they are being hostile with their rare earths, which we use for defense and innovative technology, etc. And that sent SPY lower by about half the measure that China was. So China was down 5%. We were down here stateside by about 2.5% in SPY, a little bit more if you were more tech centric, in your Qs and so on. Qs were down 3.5%. And then total defensive day, bonds caught a big bid. We'll take a look at TLT and volatility, a big jump in the VXX. About 10 plus percent, 13% about. We'll take a look at that chart. And again, new all-time highs right on the opening bell, strictly at 9:30 a.m. So we're going to have nasty, big bearish engulfing candles for a lot of markets. But here they go. New all-time highs for SPY, QQQ, GLD, XLK. GLD, no, they did hold on to most of their gains on the day. Obviously, the markets did not. XLK, which is tech, utilities, XLG, which is the S&P 50, my baby, and XME, which is metals. Metals and mining, all-time highs today, and then a reversal, some more dramatic rug pull than others. This week characterized by, so I'm recapping the entire 5 days as I do. Really, what really was a loser at the end of the day was a 12% decline of really a lot of deflation in Chinese internet stocks. We'll look at KWeb and Ethereum, the mighty Ethereum down 12%. So we will take a look at all this. It is a big show. Let me make sure I share the correct screen. Thank you for joining us. The Eagles game sucked, but again, I am not concerned. They've given me 2 parades in the past 7 years, and I trust that. Are there cracks? Are we missing Landon Dickerson? Absolutely. And so the market, the home builders was a big signal, a lot of people's radar. I've been pointing out as well. It looks really weak, 3-month lows on it. Really fast, as I said, we're doing the ETF show today. S&P down 2.7, Qs down 3.5, Nvidia down 5%. Everything was big down, but everything's been on a straight tear to the sky. Tesla down 5, AMD down 8, IWM small caps down 3%, Amazon down 5, Apple down 3.5, Meta down 4%. You get the picture. A lot of stuff on sale. Oracle just down a percent. Palantir down 5%, and gold closes up 1%. Note you're not colorblind. Notice the change there. Everything else is red. Gold up 1. BABA down 8.5%. So as Chinese internet goes, obviously BABA today a big victim on that news. Microsoft down 2%. We already mentioned Google down 2, Broadcom down 6, and Intel down 4. Here's the intraday action. So we really peaked right here at the 9:30 bell, 674. That is your new all-time high in SPY. If you signed out of your 401k, you think everything was wonderful. And then here with these big red candles when Trump started making those comments, we were at 673 in SPY. Life comes at you fast. By 11 a.m., we were down to 660. I was paying attention to certain levels here, specifically the 670 level, and then we kept on sliding lower in the VWAP, or volume weighted average price. I want to see if it eventually at 330 folks would end up bidding this market, taking it to around 662, but it is Friday, and folks usually go with the momentum of the day, and you don't want to go into that, market long if something else, comes out of China and so on and so forth this weekend. That being said, we were far away from 662. We actually closed right on the lows, oversold all day. These folks were saying, no, I'll give it to you since 11 a.m., hand over fist, and that's why you see these candles closing on the lows pretty much since 11 a.m. with extreme weakness after those comments were made. Yeah, so it looks like they were upset that the selling ended. I mean, the clock, the bell rang, and they wanted to do a little bit more selling. As I zoom out here, as I was saying this, so that is a massive bearish engulfing. That's absolutely almost comical. Look at the top of the range here, the upper Bollinger Band. I'm going to spend a little bit of time on this. The upper Bollinger Band is 675. Today we hit 674. The absolute lower piece of that Bollinger Band, I have it was a 2 and 20 day, is 655. I'm rounding. Today's low was 653. Basically, all I'm trying to tell you is technicals do matter. And also, I was talking about this the other day. I would be concerned, obviously, if the S&P closes below 600, then we have issues that, it really did digest the gains, and we probably have to look at other issues. But from a technical analysis standpoint, I was looking at, or I want to see when we would break our RSI lows from coming off of the lows of April. So as I've been saying, we're above 48 RSI. I know it seems like curve fitting, but we've been stupendous since April 24th. I want to know when we go underneath that 48 RSI, and voila, it's today. Today, you're at 42 RSI. The market has not been this weak since really just 2 weeks after the 52-week lows back when we were trading at 490 stock, or 490 ETF here. So that's an absolute massive move, and that's what I'm talking about when I say 3.5 standard deviation moves today. Really, a respite would have come right around 665 today. Would have made a lot of sense, but they really sold it off. Now, what going forward? So this completes the run. We were saying along before, we were looking for the bullishness to end on or around, I have here, October 15th, and Monday is for the 13th, so pretty significant rally. And I'm marking the low here on September 29th. Let me show it to my cursor. That's when I started the cycle here. So not the absolute pretty low on the 25th. That's a little bit too cute. I started here on the 29th to end it. But if actually, to go back to this, if it is the 25th, today is the 10th, that's a 15-day cycle. It took you right from that 50-day moving average at 650, at 643. Where were we that day? I'm sorry, 655 that day. And then we reached our assignment, our target at 675 today, 20 points in 15 days. And now sometimes the market gives back quickly, or it does it over time. We're talking about zigs and zags here, went to the bottom. So all that being said, so now I'm looking for, to wrap it up, that part, digestion, a bearish distribution phase for about probably very close to Halloween, where this bottom somewhere between, you have to accept the volatility. I don't think they send it far, far lower than that 650 level. I don't like, obviously, the candle closed right at the lows here. We talked about this a couple days ago. If things get really ugly, 650 most likely for a sell-off. We were talking about 660 for a level, and if things get ugly, around 650. Well, today we're at 653 close. So that's pretty much what your ugly is when you get a 3.5 standard deviation move. I don't like the candle that we absolutely close on the lows here, but I do see support, maybe another 75 bips or so. But like I said, the problem with this is you're going to have to correct this in terms of time more than just in terms of price. So now it's going to have to find its legs underneath it and then zig and zag. Personally, I want to see some stabilization and then entry right around that 660 point. So I'm almost okay paying up. But when you have the RSI nosediving like this is people literally who paid the top tick today, who paid 674 in SPY. It's like go into a crazy auction. Someone's saying, oh, I'll pay $3 million for these concert tickets. And I say, what? And then everyone starts going to the other line and says, nah, you can have them. Then the guy looks behind him and says, oh, there's nobody here. And that's kind of what happened with SPY, a rich bidder, and then left absolutely holding the bag of you-know-what. So when the RSI nosedives like this, again, stochastic momentum mix still sky high. I'm trying to, like I said, have an environment where we were similar like this. I guess April 15th, coming off the lows, we went from 540 down to 510 very quickly, even that in a couple of days. So there has been precedent. But like I said, Wait for this to stabilize. I think the floor will be right around 650. But I don't think the market will have a lot of bullishness over the next 2 weeks. I think it's going to be an opportunity for you right around Halloween time when this bottoms somewhere, I believe, around 655 to 660. I still think we're going into end of year, and nothing stops this train. Let's take a look at some of these charts that moved absolutely insanely today. There's so many, so let's get to them. First one, there's only two big movers up, obviously, with the big move lower today. Volatility through the VXX, a massive day, up 12%. You look at this. So it's very important, technicals and how things reach either support levels or resistance levels. So a SPY reaches a support level, lower Bollinger Band, right at the 50-day moving average. Look what happened to VXX. VXX, obviously, it's charting a non-time series asset, but nevertheless, I still like to do it. This has risen to its 50-day moving average. How much further does it go? This is, I see as the inverse of the 200-day moving average of SPY. So if SPY goes to 603, the VXX, it's not exact, obviously, but the VXX would have another move to 10 points higher to get to this 47 mark. VXX, as I said, I don't think the market has a decent 2 weeks. So I do see this rising to about, I think it did it already, similar to the move in S&P. I think we went from the ceiling to the floor in the inverse of this, obviously. So we went from here from the floor to the ceiling. So I still have a 36 to right here, 37 top on VXX, similar as I have the same SPY. I hope this is making sense, obviously, for a SPY being a floor at 650. So VXX, if it zigs and zags over the next 2 weeks, I do think it holds a 30. One of the other things I want to comment on this, when you see VXX making lows prior, this is what people started to have a concern about in April. We were really doing nothing under 200-day moving average, really not doing anything, and then huge spike, the whole liberation and then the tariffs and everything in April with the 52-week lows on SPY. You want to have the lows somewhere in the near distance. If we start holding, 33, 34 ground on VXX, that's not really a healthy place to be. You want to start seeing, obviously new lows, 32 handle. That being said, this enjoys a nice 2 weeks, probably some give backs. There's probably some decent days up ahead where this will chop down to 34 and so on and so forth. No trades immediately jumping out. Also in terms of RSI, the highest RSI for VXX, obviously if I'm looking at RSI for S&P being the lowest since April, this is also going to have its most similar RSI reading since April. So it's exactly just the inverse almost of SPY, but this is more so obviously the pricing of S&P puts. An S&P listed option. So very interesting. VXX, if you were enjoying that today, up 13%, a big winner this week. And then the other mover, TLT. I will see if this charting this for today are going to be tough because a lot of the things are going to be either at the ceiling or at the floor. So we'll see if any trades abound. You would think so on a day like today. You could probably sell calls and puts, but just be careful. Like I said, the market's going to have to correct, I think, in time over the next 2 weeks. The floor, I think, has been put in at 650. You probably want to give yourself another 1% wiggle due to just how ugly the candle was today. TLT up a big one today, a big rush to safety. Again, TLT bottomed right around Memorial Day, did bonds here through TLT, and it's really been trying to etch a nice recovery here since right around Labor Day. Around September 5th, is trying to hold that 88 floor, and here we are at a 90 handle, up 1.5% today, a big bid into bonds. They really didn't buy anything else except bonds and volatility. I think so. This chart looks a little bit cleaner to me, to be honest. I think this has another decent week to go, and it probably goes a little bit more just around, not a ton more, but I would say around 91. I would say it probably goes beyond those September highs, but still within those April highs. I think another 50 cents or so for TLT. So bonds should continue to rise in value, which means yield should decrease. And that's all that moved up today was volatility and bonds. Let's look at the big movers lower, and there were a lot. We're going to look at the 3.5 standard deviation movers, which is just absolutely monster numbers. So China, this is very impressive. China, of course, as you know, not all-time highs through FXI. That's still back in the crazy 07 days prior to the financial crisis. FXI was a $73 ETF. So there's catch-up trades abound, and traders are addicted to the stuff, as am I, in terms of catch-up trade and seeing where the overhead is. FXI, are you getting an invitation to a superstar here today? This is 52-week highs just 8 days ago, $42, and now here we are at 38. I think you still want to be a part of this story. Obviously, you're always exposed to a lot of tariffs, tweets, rumors, speculation, so on. But I think you will be rewarded with an entry at around $39. So at 38, I personally do like it. I don't think this is all this give back. This ETF, China has not even closed below its 200-day moving average more than 2 days all year. And we are still 10%, it's 36 to 38. All right, so 5% away from the 200-day moving average. What you do want to also notice, though, the RSI is nosediving, and it closed pretty much near the low. So you always want to notice that. RSI is as low as it's been the week that it closed under the 200-day moving averages. Does it maybe tag 36? I really don't think so. I think 39. Let me see this. Hold on. I just don't think it. 38, I would think, for a floor on this if they really want to hurt it on Monday and such. So maybe another percent or so. But I really think it's a decent move. Again, this will have to correct in time more so than in price. This already just gave back 3 points quickly. So yeah, that's all I have to say about China. We'll look at more Chinese internet stocks, but that's the move. Give these things time to stabilize, and if you're able to get it, so that's the thing. The level looks good, but they could go lower. So I still want to give us about a week or so. I think this China bottoms, I think, before SPY. If I'm just looking at the chart the way I usually do, I think this bottoms before. And also, which is the higher performer year over year. Obviously, SPY is a more flight to quality. FXI is absolutely kicking it year over year. People usually have a little bit more forgiveness for their winners. So still looks good. Obviously, not a great day if you're long China, down 5% today alone. Like I said, I think 39 to 38 handle floor holds, and it's going to take time, probably maybe into November, but you will see, I think, that 42 handle again, similar to SPY all-time highs returning. Okay, let's look at the next big move lower. Obviously, if FXI is going to go down 5%, EM is going to be down handily, and EM down 3, almost 4%. Similar chart. Highs on October 7th, nearly $55, and now 52. RSI, yada, yada, yada. You get the point, down to exactly similar readings in April. This isn't Mag 7. This is global markets that we're talking about with correlation. This is EEM. A little bit. So China is better. Like I said, just more velocity, more upside. This is more volatile just because you're invested in several nations, Mexico, Brazil, etc. FXI is you're just snorting straight China growth. And hence why I think it's important to understand that FXI closed under its 200-day moving averages 2 times all year, whereas this had much more of a purgatory, really, honestly, since December 17th until April. This was chopping along, resolved higher, but not in the faith that investors gave China. So EEM, yeah, this does not look, this basket, I do not think has a great 2 weeks up ahead. I don't think it goes much further below 51 even. So it's almost another, tops, what is that, 51 even, 1.5% away. And then I think that'll be a floor, but I would stay away from the emerging markets for about 2 weeks. I want to see the RSI go a little bit lower, like you saw in the other broader indices. So I think this has a little bit more to go. They closed this at the absolute lows today. They were upset that the bell rang. They want to sell some more of it. But again, this was overbought from September 10th through October 8th. This was standing room only, essentially, to get in from 52 all the way to the highs of 54.5. It's EM. It's not super, super duper volatile, and now some give back. I do think it'll invite an invitation, but I'd still rather be in FXI. If you have a ticker or something, put it in. I'll take a look. A lot of hellacious movers today, kind of like almost a comical ending like the Phillies. What a joke. I can't even imagine. That's just, I don't know how he doesn't throw it to first. Okay, SPY we're going to look at. We rarely do SPY in the video because we already did it earlier, but I just want to note, this is not EM. This is not FXI. This is SPY. And look at that. They absolutely dropped it from the top to the bottom. Just an absolute monster move. We're talking about it today because there's a new all-time high, and then you have a 3 standard deviation mover that lower that same day. I want to look at this closer and see if that's happened before, and then obviously risk return after the next 6 months, 12 months, and so on. We've been talking about, last thing on this, we said bullishness will happen, through early next week. The whole, Sal Rosh Hashanah, Ba Yom Kippur, and the ceiling was around 675, and we said something will take the market to around, and we were just talking about this in the ETF video, I think 3 days ago, to around 660, and if things get really ugly, 650. And that's really, it's really that simple. I still think that hold. I still think we have a little bit of leeway to the downside just on how ugly that candle is, and then we'll base around there, and I think we'll be rewarded. Also, just the last comparison, how people are snorting FXI much over China. FXI 2 days under the 290 moving average. S&P March 7th to May 12th, 2 months in purgatory. The FXI was totally forgiven. It was up every day, and that's when that was happening. If you recall back then, it was, wow, you really should be owning FXI, and maybe not so overhead in SPY. And then SMH was asleep, and now things have changed. So this is absolutely fine. We are absolutely extended to the upside. Again, last thing on this, divergence. We were yesterday, RSI of 66, and at basically we were at all-time highs. Immediately, like I said, spidey senses tells me to look out for 665, and with probably a lower 665 with a lower bound of possibly 655. That's what we got. So that's all I'm going to spend on SPY, down 2.7%, a bloody day for the Spizzle. All right. I like zooming out now because we could all get very myopic and just see what happened today. Let's zoom out and let's look at the week recap. This is important. And then I'm going to do the year-over-year recap, and that's even more important. Top 3 gainers of the past 5 days. If the chart repeats, I'm not going to really hammer the forecast again. The best chart all week. I know it looks a little fugazi because the gains all came from today, but the top gainer of the past 5 days was VXX. Yes, all the gains came from today. VXX up 13% over the past 5 days, the best performer in ETF land. I know it's inverse, so it's kind of screwy, but that was the best place. The second best performer is URA, uranium, up 6%. So nearly half the gains of an inverse product that, appreciates on the downside. Look at this rejection, though. Again, every candle basically looks like this in some effect. So this was as high as $55 this morning, and then they closed it basically up 70 bips all the way down to 51.60. Divergences abound here, not even 70 RSI, and that is the uranium ETF. URA all-time highs all the way back in 2011 at 135. Again, pay attention to things that have upside like that in 10 years ago and so on and so forth. Traders pay attention to it with that upside. You should have some of your book allocate to catch-up trades like that where there's not blue skies ahead. There's catch-ups, and then you want some that are just breaking the floor or breaking the ceiling, like NVIDIA, new all-time highs, and so on and so forth. They're going to give you great appreciation in your portfolio. Uranium, this is going to have a really nice 2 weeks. I know it's not ready for $55 today. That chart candle is telling you that. It's tall. I think it's a Dragonfly Doji, it's called here. You definitely, it's not ready yet, but this looks to me within 2 weeks. I love the flows in it. This will be at $53 to $54 in about 2 weeks' time. It still looks really, really good. Uranium. A great entry, by the way, is $49. If you can get that on market volatility, would be wonderful. I would do like a 49.53 December call spread. You could do a couple of things. You can maybe even sell the 48 puts, and you can buy like the 46 puts going out a month, and you'll collect at least $1 for that. I would imagine. I have to look, but there's. Uranium looks like a nice setup. New 52-week high today, then a rejection. I think it enjoys a nice 2 weeks with some zigs and some zags, but resolving higher. Gold, let's take a look at it. So again, best week. Volatility up 12.5%. Uranium, number 2, up 6%. And then number 3 was gold, up 3%. Look at this candle. That was so I apologize. Not new all-time high today for gold. Apologies. That was still 2 days ago, 374 stock. But today, up 1% was the GLD. Obviously, very hot, still overbought. GLD's been overbought. This is not a typo. This has been overbought since basically this is Labor Day, September 2nd. Since stock closed at VWAP that day, 324. We're now at 369. Absolutely insane. I would give this, about 2 weeks to breathe. a phenomenal entry point is 350 even. Possibly you capitalize on that through market volatility. It's up on defensive days like today, and it's up on market days when you have SPY making new all-time highs. So it's going to test your patience. I'm not going to chase it here, though, personally. I would tell you when it would set up, but GLD looks very, very strong. One of the few things that was up today. Top 3 losers the past 5 days. Let's look at what was absolutely hammered. Nothing worse than Ethereum. Ethereum down 12.5% in the past 5 days, down 8% today. Much of it was today. You see it try to get to its all-time highs back from late August at $37. We're rounding here. It couldn't quite do it. It got to $36. It got very close, and boom, a very, very quick drop from that $36. Like I said, 12.5% over the past 5 days. Now, this is obviously one of your year-over-year leaders. What is the setup, if any, here? Give this one time. I don't think this has a great 2 weeks, and I think because of the volatility of it, it maybe sends it as a little bit lower, but just to about there where that floor was on September 25th. It was exactly at 2087. I think that holds. That essentially coincides with the August lows. So that's another. We'll see. Obviously, I see obviously a lot. We'll see how it trades this weekend. I think you possibly have another 3% to the downside in Ethereum. Yeah, I would wait for that to bomb around there. Probably give it like 2 weeks though, and then if you get in around 29, that'd be awesome. Probably more realistic is to get in around 33, and then those targets are still the same, right around 36 to 37. Ethereum, the worst week though, if you're holding Ethereum this week, down 12.5%. Yikes. Number 2, like I said, we're going to look at Chinese internet. It's time. Chinese internet down 11% in the past 5 days, or an average of 2% a day. Today down 7%. Look at this candle. There are the highs, $43 on October the 2nd, just 8 days ago. And look at this candle. Today down 7%, all the way to the lows here. You got volatility expansion that actually opens up the Bollinger Bands, and it trades below the 50-day moving average, silver, a curling 200-day moving average. RSI nosediving, hasn't been this low since the week it closed below its 200-day moving average. Is that a sign? Is it headed there? Obviously, a lot of correlation with FXI is KWeb. I would sit this one out for about a week or so. If you get in right around here, 39 and sub 39, I think you're going to be rewarded. This is still a great area. I think probably a more realistic entry after the dust settles is 41 with a target of 43. But I do think you'll be rewarded. Give us the dust settle time about a week, and I think if you get in under 39, you'll be good. That is KWeb. And then the third worst week, XRT retail down 6.5%. So the worst weeks after all this bloodbath today, if you take a step back, it was Ethereum down 12.5%, KWeb down 10.5%, and retail down 6.5%. Let's pull up retail. We were looking at this chart recently. I think I was wrong on the call, and sometimes this is a lead-in for what the market does. You want to pay attention to what I was saying about home builders, and if it's a tell about the market. We had said, I'll tell you right here, we were expecting highs in this ETF. Hold on. October 3rd, I'm looking at my note here. October 3rd, I said, get into XRT under 86. Let me go to it. I'll say when I'm right. I'll say when I'm wrong. Here it is. October 3rd, I said, get in under 86. VWAP was 87 that day. The low was 87. The next day you could have got in. And my target was to hold for 2 weeks on or around October 18th, and a target of 90. That was not the case. It went up to 88 that day, and now it's been down every day since. And it looks like it wants to have a date with the 200-day moving average of 78, which would not be good. That could be a sign that the S&P maybe wants to go to its 200-day moving average. I don't think so, though. I would give this time. This is going to take the reason why I say give it time is these are closing on the lows on big candles every day for the past week. So that's really ugly. 6.5% over the past 5 days. Blah, not really a massive, in terms of percent a day. That's like a Ethereum in 10 seconds. But these are big candles and they're still low closing on the lows. You need someone to step in. And I think those buyers will step in probably, at 78, they would. Give this another week or so of time. And then I do think it will head to $85, but it's going to be frustrating. That is XRT retail, the third worst week. Top 3 trades of the past 5 days. You were not spoofed at all or spooked by this market. If you were, long VXX, short Ethereum, and short KWeb. Those were the 3 best trades of the market. So trades that stand out in hindsight. If you want to chase and you think next week will be exactly the same, it usually isn't. But you could be long VXX call spreads. You could short Ethereum, short ETHA, which basically you could sell upside calls. Be careful, but you can have rich levels. Maybe sell 15 delta calls. I don't know how much you're going to get paid, but it is Ethereum if you want to collect some income. And then you can. The other one was short KWeb. You could have bought KWeb put spreads. Those would have worked really well. Obviously, Ethereum put spreads as well. Now, top 3 trades of the past 52 weeks. My favorite part of the show, when you really step back, last October through this October, you were number 1 winner. You got to have some allocation to this. I know I was seeing on X, Cycles fan saying, yeah, good luck buying GDXJ and have your portfolio be significantly down when it comes down to earth. These things have a lot. Markets don't have to make sense, okay? And hence why this was your year-over-year leader and overbought for 6 weeks. That took this stock from the ETF from 80 to 105. That's 20% plus in just 2 months on overbought when you really knew that you were going into a different gear. That being said, GDXJ up 103%, okay, almost 2% a week is GDXJ. Let this thing come in. It was flat today. No one even really considered selling their shares today. That's how much of a winner this thing is. The story's not changing. I wouldn't enter right here, though. Give this about 2 weeks to simmer. And if you get in around 96, I think you'll be happy. That's your setup. RSI not nosediving either. This thing's still holding a beautiful 63. High volume yesterday. Stochastic momentum mix. Just this thing's absolutely been ripping since, minimum since they entered that overbought reading on August 29th. Absolutely just amazing. The gold miner juniors all year, and especially in the past 2 months. So gold miner juniors, congratulations if you own this one since last October. It's the best. It's number 1. Ibit has slipped to number 2. And like I told you, so no GDXJ immediate setup right here. If you want to do calls spreads when it does set up, like I said, in 2 weeks around 96, that's probably the way I would do it. You can also do the sell put. If you get in around $96, you can sell the 95 puts and buy like the 92 puts and collect the difference. Number 2 winner is another ETF I absolutely love. Ibit up 95%. Okay, Ibit, the all-time highs were just 4 days ago at nearly $72, and the boom, 66. When we were there, I pointed out a divergence. It wasn't even 70 RSI. We were an RSI of 68. And I said, look out, it's very possible we go from 72 to $66. And here we are at $66. So pretty important. So now what for Ibit? We already talked about Ethereum. Give this, that was the rip. I just want to point out the move was from the September 29th. So I want to just point it out in terms of here. So the move was $64 to $72. You got your more than 10% move. And now there's just some, volatile give back. I would give this space, the crypto space, 2 weeks. This usually does a dip, then a rip. I would give this about 2 weeks. The floor would be about $61. I don't think it goes below those August lows. So that's where I'm thinking on crypto. I don't think it has a great weekend or considering how this candle was down almost 4% today. I don't think it's going to have a wonderful weekend. And like I said, for Ibit, I think your floor is at $61. And if you like crypto, it's your number 2 year-over-year leader. I think you'll be rewarded if you buy 61 in Ibit. And number 3, and you got to understand that this is still, yes, some family offices play crypto through buying ARK, but you do have to understand that this is Cathie Wood's basket of Roblox, Tesla, and Roku, Tesla, Roblox, and obviously some other names. This ETF has been on fire, up 88%. That is your year-over-year winners, okay? So the kicking butt trades have been the gold miner juniors. Gold miners also doing very well, the bigs. Ibit, crypto, Bitcoin specifically, and ARK. ARK up 88%. Let's take a look at the chart. I love ARK, obviously. Great looking chart. Right here, we had a little bit of a divergence when we hit $93, very close to 93. said, look out, we can have a quick visit to 85. And today we touched 86 very fast. So here, I don't think this is going to have a great 2 weeks either. I think the floor will be right around 86, which is where we stand today, essentially. And that will be your invitation. Still above 50 RSI. Still looks decent. I don't think they're really going to take this too much lower. Again, when I say, what was I saying for the floor here? If things get ugly, I mean, they could take it to about 77. This has to come off more. All this new, the old resistance, I think has to be tested for support at least a little bit, and that takes you to about $78. I don't think this will be super well protected like we saw from the other beta names. So we shall see, and that's ARK up 88%. All right. Hope you enjoy this. We will be back on. Monday is Columbus Day. Don't think that's going to work. We'll hopefully be back on Tuesday. Peace.